Good evening, everybody. Welcome to the Asian Express by In Money Stocks. My name is Nick Santiago. I'm here for another week here going over the Asian markets. Today is August 4th, 2013. The first chart that I'd like to look at today would be the Nikkei 225 index. This is the Japanese market. Right now you've had a solid two-day bounce in Japan, really on the back of a slightly, or I should say a sharply weaker dollar-yen chart. But either case, this was our last maximum upside move. Now we're going to look for maximum upside move to be right around the 15,160 level. I really don't see the Nikkei getting much above that area. It's going to come into a big congestion level or big sell-off point going all the way back to May. So again, if it is able to get through this level, not too much more would I expect to the upside. I think around 15,160 would be the extent of it. Any breakdown here, this can easily go back down towards this double bottom, which was made right on June 13th. So again, max upside in the near term would be right around here, 15,160. Breakdown below these lows, expect the double bottom low to get tested from June 13th. So that's where we stand with the Nikkei 225 index. We'll see how this all plays out going forward, but again, the Japanese have done exactly what the Americans are doing, the central banks, I should say, as far as money printing goes, except Japan is about one-third the size of the U.S. economy, and they are printing 3 times the amount. So again, money printing, money printing, money printing. We'll see if they can inflate these markets back up to that level, and we'll see if problems do arise when price is hit at that point. All right, let's take a look at the all-important Shanghai Composite Index. This is mainland China. Right now, the Shanghai has pulled back decently off of this level, which was right around the 2091 area. Max upside in this index on a daily chart is around 2150. It's very difficult to see this market get above that 2150 level. You also have a 200-day moving average, but I'm not sure that will happen. And if it does, by some chance, break lower, expect double bottom lows, and then really expect to move back as low as 1650 on the Shanghai. So again, it's make or break time for the Shanghai Composite at the moment. Right now, though, there is a chance for it to move higher. I won't rule that out, at least in the near term, and we'll see if it does get up to that 2150 level. Not sure it will do that this week, but that would be maximum upside target in the near term. I don't see it getting above that level. The pattern that's in here right now is not the greatest, but it is trying and climbing. So again, has not broken down yet, and until that happens, you always got to respect the upside, especially when you have central banks coming out making comments and really printing money the way they have. All of them have been printing money recently. So we'll take it one step at a time. Looking over a few other Asian indexes, go to the Hang Seng, which is somewhat independent from China. Right now, I don't see this going up much more. I would have to say 2250 is really about the extent of it, 22,500 I should say. But that would really be the extent of it. You're going to come into a big resistance point right there. Line is in there, and you can see how price stopped here, price stopped here, price stopped here. There's my next level. Not too much more. Even though you have a nice little bullish consolidation, I don't really see it getting much above that area. So again, that would really be the extent of it for the Shanghai, around 22,500. Don't expect much more upside from there. Looking over the Indian Sensex Bombay Index, or the Bombay Sensex Index, I should say, very, very weak, has come down sharply, cut through all the moving averages. You're tackling this little gap area. Ultimately, I expect this thing to trade down, to around 18,675. So I'll put the line in there so you get a good visual. 18,675, close enough for government work right there. So again, that's where I would expect this index to get down to. Around here, expect a bounce, expect a little bit of strength. So around 18,675. If it overshoots, it would be right to 18,500. You'll have more support there, but I don't expect it to break through there. It's also very heavily oversold, so watch for a bounce in this vicinity for the Bombay Sensex Index, but very, very weak so far. Looking over the Taiwan Index, and what you'll see here is that Taiwan is still holding steady. Here was our maximum upside a couple of weeks ago. You came pretty close, has pulled back. This level will still be maximum upside. I just don't see this thing getting above that level. So if you're taking a look here, around 8,300 really would be its maximum upside. Pullbacks, you're going to have a lot of support at 7,900. You'll have more support at the 200-day moving average, and then obviously double bottom. Right now, the pattern that's in here is telling us it does want to push up a little bit, so we'll give it the benefit of the doubt that it will push higher, but no more than 8,300. That would be maximum upside in the near term. Singapore Straits Times. This has held up pretty well. Here's our maximum upside levels, around 33 and a quarter. That's all we see. So again, just expect 33 and a quarter to be maximum upside. I don't see any more upside, but so far it's held up well. 33 and a quarter, that's where you would look for a more pronounced pullback in the Singapore Straits Times Index. Okay, let's take a look at the good old Kospi. Kospi nearing its maximum upside. You're going to see right here around 1950. That will be the extent of it. Actually had a pretty good sell-off on August 2nd, but we'll see if it does revert back up and probably stalls out again right at 1950. It may have already started to pull back. There's always a chance of that, but I just don't see this index having any real strength or momentum to get above the 1950 level. So that would be maximum upside, and it already may have started its descent to the downside already. So you have to be a little bit careful there. When we look at the Australian markets right now, just a powerful, powerful move, but maximum upside is coming up, and that's going to be at 51.45. So don't expect any more upside in the Australian markets. 51.45 should be daily chart upside. After that, if it can consolidate, hey, maybe it goes higher, but right now 51.45 is what I have penciled in, give or take 5 points. Okay, so that's pretty much a wrap for this week on the Asian Express. We go through these charts pretty quickly, so I don't think I missed all that much. But again, you always want to be a little bit careful. But that's what we're looking at right now when we look at these Asian markets. I want to wish everybody a great trading week, and we'll see you on the charts.